who I am. For those who might not know me, I've been in the SME space now for, well, my whole life. I've never had a job. I've been in SME since I left high school. Used to buy and sell companies, fix them, and then on sell them. Lately, I started an accounting firm, cloud-based. So what you guys most people are experiencing now from working in the cloud, we've been doing so since 2006. So we have a little bit of experience in this lockdown space. Have moved on to specialize in tax, doing HDIP, and then lately my international tax to help SMEs expand across the globe. Work very closely with Thinkroom and the team. They're always great to work with. Great team. So enough about me. Let's start. What I'd be here for. Will COVID cause your business to implode? Unfortunately, for a lot of SMEs, the answer is yes. And it's mostly going to be around cash flow. A lot of people are sitting and they essentially like rabbits in the headlights, wondering what to do with this oncoming truck. So hopefully what we're going to be able to share here will help you guys avoid the implosion. So effectively cut down to your core, look after yourselves, and then actually take it forward from there. Okay. Most important element now, if you haven't already done so over this period of time, relook at your business completely. Contact all your clients, all your existing clients. Get a feel for where they are. Who can pay, when they can pay, what their future plans are. Just have a general conversation with them. Get a feel, how they're viewing their emergence from the lockdown. The reason for this is going to give you an idea as to who you can actually and rely on in terms of your existing clients for cash flow and things like that. So that's probably the first and most important thing to do. Understand your clients. It might give you an idea to review your market. Maybe you can see new clients in the space where you want to change. And then once you know what your existing clients are, go through the rest of your actual expenses, your businesses and things like that. Understand what your costs are. What can you cut? I mean, a lot of people are they've realized you can work from home. So do we need the offices anymore? Maybe we move from an office to a co-work space afterwards where we just have meetings. So a lot of these items are and review in terms of, just cutting costs. Transport, we realize we don't have to travel as much. We can do a lot more of our meetings online. So just go through everything and be incredibly hard, and then go back and look at your clients again and go and say, okay, well, this is what I'm estimating, and cut everything to suit, including staff, offices, everything to suit. Build a budget around that, worst case. And that'll help with what you're doing forward. I mean, obviously, if it turns out that it's not worst case after the fact, at least you actually prepped for what could have been the worst case. And worst case might be, there is no income. Where do we go forward from here? And that's something to obviously think about. So budgets, very, very important. If you haven't done them, go do it this afternoon after this call. Tear it down totally. Understand where you should be going, things like that. Very, very crucial elements. All right, so we're going to get into the boring, apparently boring for a lot of people. They don't want to deal with accounting, but we're going to get into these sessions where, again, looking at sales, who are we selling to? Who will still be using our product? Are we going to refocus our market? Things like that. So you might have discovered there's more opportunities now, and that might be something to think about. Your costs can be changing. Costs of your products. Are you looking for new and suppliers? Maybe your suppliers you've actually discovered now are not as accommodating as you thought they were. You've discovered new attitudes about them because they're now threatening you with things. So look at that. Look at your costs. Look at where you can find people offering the same service at a better price. A good way to understand is improve your GPs. Operation expenses again, right, we said, go through and cut everything you can think of. Maybe we don't need the telecom switchboard anymore. Maybe there's a virtual version, or maybe we don't need to have some of the, like I said, rent. We don't need a big office. We can move down. Staff can work from home, so there's no transport involved. Things like that. Depreciation I've listed there, very crucial. There are, depending on your status as a business, we'll get onto it later on, but you can aggressively and depreciate your assets. What this does is obviously it ensures you have a lower profit, which means you pay a lot less tax. So that keeps money in your company. So our focus across this whole talk is keeping money in your company so that you can effectively fight another day. Bad debts, guys, anyone owes you money, that's sort of, you've invoiced clients, they haven't paid you, things like that, write off those items. Go credit those invoices. If you've made loans, write them off in your books. If you do recoup them later, that's fine. You can add them back in later. But the more of these items that you write off in your actual accounting now, lowers your profits again. Lower profits mean lower taxes. Lower taxes means obviously you've got more cash in the bank. So, chat with your accountant, be as aggressive as anything. You've been hanging on to those invoices for a few months, what to do with them, write them off now, credit those invoices. You can potentially keep chasing the debt, which is great, but at least, take them into your books now. We've had an opportunity, the financial year has just ended. Accountants are busy drafting financials now for end of Feb. Make those adjustments now. So when you're filing your returns and doing your tax returns, it's going to be much easier. Okay. As you earn, this is quite a hot and potato at the moment. It's in the news a lot regarding SARS is giving deferments of 35% on pay as you earn, things like that. And these items, very, very important. Look at it. Some people are not getting paid. Are they getting paid? What can we do with it? Again, our focus is around cash flow. If you're the director of the company or the owner and you've been taking your salary, rather take a loan. Put the money to your member's loan account. It means there's no pay as you earn that needs to be paid over. Okay. Same with staff. If you've got some of your staff, you're trying to help them through this period, they're not going to get UIF, or UIF is going to be late, give them a staff loan. It could be the same as their net pay in the end of the day, but now they're getting a loan instead of a salary. Again, the outcome is there's no pay as you earn that needs to be paid on a loan. So the deferment in pay as you earn effectively becomes 100%, not the 35% that they're talking about. And they're being a little bit disingenuous in saying that SMEs are getting up to 70 billion rand in tax savings by things like in deferment of pay as you earn and VAT. There's no saving. It's a deferment. You're going to pay it later in the year. So rather structure on your terms. If your staff get loans, if you put your money via your member's loan, you're still taking the net pay amount out. When COVID-19 lockdown is lifted, all you do from that point is the 2 months maybe that you've maybe paid your staff a loan, you just increase their pay accordingly, spread it over the remainder of the tax year, and then there'll be a slightly higher pay as you earn bill actually going forward. And that then allows you to structure your actual cash flow. So at least you've got cash at hand now, which is really going to make all the difference. It's a case of what happens after lockdown. That's the area that needs to be focused on now. Okay, so while the 35% in deferment is nice, we think the 100% in deferment is a lot better. Okay, so go through there on that. VAT, again, SARS is offering in deferments. Be a lot more aggressive on VAT. Here you can't, there's a lot fewer areas that you can focus on and stuff like that. But essentially, Again, if you've spoken to all your clients in terms of payments and things like that, anybody who's even so much as gives you the indication they're not going to be able to pay you. Anyone sitting on your books where you've issued invoice, they're more than 30 days late. Credit all those invoices. So what that effectively does is that there's that VAT that you now already claimed or paid on is going to have to be reversed in your next VAT cycle. On the other side of the coin, then you've also got expenses. People are still invoicing you. Rent is still being invoiced. Suppliers are still invoicing you. So even though you may not have funds to pay these people, you can still claim the VAT on those invoices. So if you're following where I'm going with this, your income has now been reduced, therefore there's no VAT that you've got to pay over. Your expenses are obviously still there, you're getting invoices, you can claim the unpaid, even though you haven't paid it, you can claim the VAT on it. So a lot of people might be in a space where they're going to get VAT refunds from SARS. Or if they are then following this method, still have to pay a portion of VAT, then apply the 35% and deferment that they're offering. Again, what it's going to do now, it's going to put a lot more cash in your bank account. Less money leaving your business. Yes, the client might then decide to pay you after lockdown. Things have been picked up. All you do then is you credited that invoice, you re-invoice it in the new VAT cycle, and you pay your VAT as per normal. So the thing is, as we're saying, we're getting very, very aggressive here in terms of keeping cash in the bank. Okay. So those are where we are at. This is what government's now offering. There's been talks, a lot of you guys have seen this in the news. There's a lot of support being offered out there. The bad news, unfortunately, is that a lot of these programs are very slow. The legislative hurdles are quite hard to get the funding, and these guys are also on lockdown. So processing the payments, processing the information through, all of that is just taking longer. So while these initiatives are very good, don't expect money within weeks. We're talking some of the money is only coming out in about a month or 6 weeks' time. There have been a few people that have been paid, we've heard, but cut your expenses right now, what you can do, but still apply where you can. So there's a lot of these things like as you can see here, there's the debt and relief scheme that's coming through. This is what the guys are doing. So normal SIPC companies, you can go and register, make your applications. Just read all the documentation before you and submit. There's a lot of reports coming out now in terms of applications being and rejected because the paperwork is not up to date. A lot of people are feeling they can't claim because they owe SARS money, or they haven't submitted returns or things like that. The departments, the various government departments have said that they're going to assist with that. So even if you haven't paid, part of the regulation or regularizing your actual business is to actually help you with that payment. So the funding you might get might include the payment of SARS. So just good. And they haven't unfortunately been very clear on a lot of these things. So don't not apply. If you feel one of the programs work for you, look at them, understand them, apply in order of what you feel works. So go for the maximum. There's a new one coming out now that's not on the summary that we're going through. And I'm not going to run through each one of these. I'll touch on some of them just to ensure, certain things. One of the important ones is like this Oppenheimer fund that they're doing. It's mostly around paying your staff 750 Rand a week up for a period of 15 weeks. And they're happy that you're applying in conjunction with any of the other funds. So you can do the TERS application and the Oppenheimer application. So those type of things. So just look at it, understand it, look at the programs that are sort of working in your favor. There are a lot of them, like there might be this tourism fund. You're running a guest house. 200 million is not going to go far. So there are other avenues that you might want to look at in terms of your funding. But then again, have done your budget, know where you're going. What is the post-COVID plan of launch? Are you just going back to your same market? Are you going back to business as usual? It's never going to be the same. So change your outlook, chat with as wide an audience as you can to get information. Look at changing your business. Go back and revisit all these items. There's a lot of information taking through. And one thing that's not actually being publicized that should probably be highlighted is that all the other programs that were happening pre-COVID-19 lockdown, so your CFA, your CEDA, your RDC loans, all of the stuff that was ordinarily taking place is still available. So maybe you don't want to do a COVID application. Look at what is still available, what's still applicable for your business. So yeah, the key thing is to complete actual, breakdown of your business, tear it down totally, and then relook at it in terms of how do we go after this, where are we going from. And as you can see, this is quite a popular, the TERS one for UIF. A lot of people are applying. We've picked up with our clients. It's not applicable for some of them. We've got clients in the restaurant industry which are totally uncertain when they're going to be opening up. The rumor has it might only be as late as October of this year. So they've just gone and done a normal UIF application for their staff because the business is effectively closed. So yeah, just understand it, understand where it's going. We're available to chat outside this forum if you guys would like to reach us and go through it. The Sakuma and Relief Fund, they've been quite good. The Rupert one via business partners, they were incredibly overwhelmed. I think something like 80,000 applications in 2 weeks. They're now busy publishing results of those applications. Again, a lot of the applications are turned down because they're not actually complete. People haven't read the application process properly. They've rushed into it. So it looks like they're going to be opening the program again once they've gone through all these applications. So just look at them, prepare. If that's where you'd like to go with it, have a look at it. A solidarity fund, obviously important, mostly geared around manufacturers, suppliers of essential goods for COVID-19 and things like that. So definitely worthwhile having a look at it. But CFP Foundation, again, we don't know yet. A lot of these organizations are still trying to work out the cheapest way to get the funds into the hands of SMEs without red tape and things like that. So just watch the press. They will be making announcements around these things. Again, giving hope and things like that. A lot of organizations. One of the things that are not on here that was announced on Tuesday night, there's this 200 billion rand credit guarantee that the government's offering around SMEs. Now, that's not a new thing. We've had it all the time in SA. So back in the day, when business partners and Kukula were still known as a small business and development scheme, what happened there is you would go to the bank for a bank loan, and through Kukula, they'd actually guarantee 80% of the loan. So your bank would do the loan as per normal. Their risk is 80% covered. So they can be a lot more sort of lateral in their thinking in terms of who they're funding. So it made loans easier to get. So that program is what they were talking about with the 200 billion rand. Terms are not out, unfortunately, yet, but from what we've seen on the documentation that's been shared and with us, it's going to be interest prime -2, which is quite good because prime's dropped enormously now. And the first actual payments are 13 months away from the time the loan is granted. So it gives you time to get your house in order. So again, tear down your business, re-look at it. What funding do you need? And apply to those funds that are going to give you the actual best help you can. As I said, normal funding that was around before COVID, are still there. Overdrafts at your banks might are still open to do overdrafts on your business. Normal medium-term loans that you're finding, personal loans, invoice discounting, those are still taking place. Unfortunately, we've seen for a number of our clients who use the service, it has been narrowed down to essential services, because obviously the people who are funding the actual discounts on your invoices would like to get paid as well. So they've narrowed down their funding to focus on essential services at the moment. But I think as our economy opens up, they'll then extend that further. Again, if you need assets to grow your business in this time, maybe you're getting orders because you are an essential service, that then flows through to a normal asset financing, stuff like that. Again, unsecured lending does sort of happen. Normal, I mean, the guys are the VC still around, the other funds are still around. They're still doing normal funding. So just have a look into those things. It's definitely worthwhile having a look at. I put this slide up, and I want to go through small business corporation, because a lot of SMEs, their accountants don't make them aware of this, and this gives you a lot of aggressive sort of room to cut your costs and reduce your income taxes, and with SARS already. The nice thing is, if you discover after this talk that you are a small business corporation and your accountant has and erroneously being treating you as a normal business, you can go back and restate your income taxes with SARS for 5 years. And minimally, if you find out after this chat that you are a small business and you weren't being taxed accordingly, minimally you'll get back 500,000 Rand. This is roughly about 100,000 Rand a year is the baseline in terms of your tax saving. So I thought to include it in this talk because we know it gets overlooked a lot. It's one of the first things we check with our new clients, and we've seen literally 60 to 70% of new SMEs coming on board with our client base have not been treated as small business corporations. So this will help a lot. The items you must be obviously having a look at. These are the areas. Is your gross income lower than 20 million? And that's what's on your annual financial statements. They're not including VAT. So your gross income is your turnover ex VAT. So that's the actual threshold. So it's quite high for most SMEs. I mean, and we're looking, that sort of accounts for about nearly 60% of businesses in SA. So it's huge. So have a look. If your turnover is below the actual threshold, that's step one. Tick the box. You're not a personal services provider. So immediately people think, like for us, for example, we're accountants. We sell our personal time. Tax attorneys, lawyers, we're selling our personal time. So automatically it will say you're excluded. However, there's a caveat. If you employ 3 or more people that are not family, direct family, then you do actually qualify. So just check that with you. You and the owners of your company, you own your entity, it must be owned by individuals. Okay? You and the other shareholders in your business, providing you don't own other companies, then you actually qualify. Because what SARS doesn't want is that you turn over 50 million actually, and now you split your business into 3, 20, 20, 10, bingo, I qualify. No, that's what they're trying to avoid. There are ways, obviously grey areas around that, where clients they've kept one of the businesses, the wife owns another, their child owns a third, and therefore individually they do actually qualify. So those things are the grey areas that can be played with, and they are legal, so it might be worthwhile talking to someone if you're uncertain. Not more than 20% of your business income comes from professional services. Again, for example, using the tax guys as an example, we might have a property business that's generating income, and we then also do tax advisory on the side. Providing the tax advisory is not more than 20%, you actually qualify. Okay, and then obviously it must be a business registered at SMME. Can't be a sole prop. So it can be a CC, a PDY, any of those elements. So definitely have a look at that. So although the tax write-off immediately is 100,000 Rand tax saving, the big saving for SMEs is around in depreciation. If you recall one of the earlier slides in the accounting, I raised that. The reason around that is if you're if you're an SPC, you can literally, you buy a new laptop. Now we've all just maybe bought new laptops, more IT stuff. You can write that off 100% in the year that you've purchased it. So that is massive. So you might have been a designer. We've got a client who does that. Those Macs that they use, I mean, her recent one is 100,000 Rand Mac. She gets to write that thing off immediately in the year that she buys it. That's 100,000 Rand less profit without sticking money out of the company. That's huge. Other elements in terms of manufacture. Maybe you make juice or you're manufacturing masks now. It's the big thing. The equipment you utilize to manufacture those masks, you can write them off very, very aggressively. 50% in the first year, 30, 20. This is where the real savings, because and depreciation is not an actual expense that you spend. It's not money you pay out. So it sits on your income statement as an expense. But all it does is it actually lowers your income tax. So there's massive savings. So that's why it's crucial. More than the 100 grand income tax you're saving, these items are much higher. So if you discover you are an SPC, your accountant hasn't been treating you that way, look at these write-offs for the last 5 years as well. There's huge, huge savings. A client that we helped recently, we managed to get them nearly 7 million Rand back over the last 5 years. Can you imagine? That's actually free money. He had already paid it. So here's the tax breakdown, just to give you guys an idea very shortly around where we're at with it. So you can get an idea. Normal tax for an SPC up to 75. Table slightly changed. It's moved up, I think, to 79 now. But for illustrative purposes, it gives you the same idea. As a SPC, you pay no tax up to 75,000. A normal company, look what you're paying, 21,000. The sliding scale up to 365,000 in taxable profit. You only pay 20,000 Rand income tax, as opposed to 102,000. I know what I could do with 80,000 Rand instead of paying it over to SARS. And then the threshold ends at 550,000. That's the sort of maximum. If your profits exceed 550,000, the portion above 550,000 is obviously taxed at the normal rate. But I mean, look at that saving. Up to 550,000, you pay 59,000 Rand in income tax instead of 154,000. I mean, 94,000 Rand, that's a new car, one of these little Datsun Goes. You can actually put a Bolt driver on the road every year for the savings and income tax as an SME. I mean, that's just to put it into real terms. And now that's another income stream and another job just from doing actual tax saving. So I've gone through this fairly fast because I know it makes more sense. You guys want to ask, good questions around this, and I'd rather you guys ask stuff because it helps a lot more in the understanding. But just to wrap, go back, look at your business, do a complete breakdown, tear it down totally. Look at your markets, look at your suppliers. Who are still going to be helping? Who do you still want to work with? Your customers, who are paying? You might realize now that customer that always gives you a hard time, this is a good time to actually terminate them. You don't want that headache in the future. Write off those bad debts. Credit those invoices you're not going to be paid. Claim the VAT on the invoices that you've received from everyone. Even if you can't pay them, you're allowed to claim the VAT. Get as much money into your bank account as you possibly can. Pay out as little as possible. Members' loans, take your salary as a loan. Your staff, if you were going to pay them a salary, give them a loan. There's no pay as you earn on that. that keeps cash in your business, which means you might be able to pay them a salary for a month longer or 2 months longer. So just think about these things. Yeah, so that's really it. It's like restructure, rethink, pay as little out as you can in terms of those things. Yeah, and then we just take it from there, and then look at the various packages available and see what suits your new idea of where you want to take your company from here. Thanks, guys. Let me open it up to the floor if there's questions. Mahiri, I don't know if there have been some items in some chat box. Cool. Mary?
Okay, whilst we wait for
Hi,
Mary.
Tyronne. Thank you so much.
On Mary, you on mute. Thanks.
Hi, Catherine. Thank you so much, Tyronne, and thanks for those really practical practical tips that one can actually implement. I think in a lot of these sessions, there's a lot of content, but not these actual practical implementation tips that you can literally go, as you said, this afternoon and do straight away. So thank you very much for hosting the session this afternoon. And there have been a few questions that have come through directly to me. I did post one of them in the chat above. If I can just go back to that. Here we go. Yeah. So what is your opinion on what companies should do where they employ skilled or professional workers with incomes of the national averages of 20K per month for skilled workers and above, other than the guaranteed loan scheme? I know you did touch on that, but perhaps you could go a little bit more in depth.
Yeah, so skilled, I mean, if you look at a lot of the skilled staff are generally like, I mean, we look at ourselves. I mean, our company, for us, it's a normal day. We're working, we're offering accounting, tax, advisory work, and we're doing a normal stuff. So generally in the skilled economy, IT guys and stuff like that, that work really hasn't slowed down. So in terms of that, if your clients are not paying you, that's the real headache there. I mean, in terms of work is available, work can still be done, but then the headache, the side of the pot comes in is either late payments from clients or non-payment. So if you do have some cash in reserves, I would then definitely have a look at treating their pay as a loan. They can still apply via TERS. It will make sense, and then you just top up the difference, or you know, when you look at the various applications, the various schemes. Look at what suits your business, because I think what's happened over the last 3 weeks, a lot of people have been a lot of knee-jerk and reactions, and they're reacting and sort of snatching at little bits and pieces. Take the time to stop and just look at your business as a whole and where you want to go forward, and then cut that cloth to suit where you're going, and that'll determine a lot of what you're going to be doing in terms of how you're going to be treating the staff. Because a lot of people think, but I feel bad, I'm not paying the people. The thing is, if you don't ensure that you can make it, you're all going to be unemployed. And so be a little bit selfish and think of yourself, think of your business, think of how you can keep going. And if you can keep going, that allows you then to keep the staff going from that point of view. So it sounds a little bit counterintuitive, but look at yourself first, look at your business first, and then take it from there. Then roll that out according to your staff, key clients, and so forth. All that helps.
Thanks, Tyronne. And we've also, ladies and gentlemen, there will be a few poll questions that will be popping up. If you could also answer those. Then a second question that's, or another question that's come through is, just post it on the group quickly. And what is your opinion on holding current leases? Is there anything legislatively that can help us negotiate with landlords?
Yes, so what's happened is we've all become experts online around, you know, things like the law and the various things. But what we're seeing now in terms of this lockdown, it's unforeseen. It's definitely a force majeure thing. do have some documentation on it, which I'll share. I'll share with the Thinkroom team, which you can gladly share with everyone else. It's from one of the top law firms, and they citing case law. This is definitely a forced majeure environment. So the question is just chat with the landlords, explain the situation. The government has announced that any evictions during this time are being halted, so no one can evict you from anywhere. And then just go forward from there. If you do have funds, obviously the whole downstream trickle through effect of what's happening. So that's why they're encouraging large corporates to pay, suppliers and so on and so forth. And that's why they're pushing money into the actual economy so that the trickle down effect keeps on happening and we go forward from there. So that's, so there are measures. You can cite this to your landlord, even share the article with them. But the point is chat with them. Just, it's real. That's a real thing. Maybe you can pay only a portion of your rental and then actually do so. So a lot of them do understand this.
Yeah, it is. It's a tricky time. Great, thank you. Everybody, we've got the poll results are up. So yes, clearly, Tyronne, I don't know if you can see that, but the concern about cash flow is obviously huge, sitting at 60%.
Right. And that's why I wanted to focus this finance talk specifically around that. If you look at all those things we've just spoken about, it's going to leave more cash in your bank. And that's what's going to help you. That's what's going to get you through it.
Okay, great. Thanks so much, everybody. You're more than welcome to post your social media handles and websites on the chat group. You can also contact us directly. Our details are in the screen there that is on view. And we can also put you in touch with Tyronne. But we will be posting this on our social media channels, a recording of the presentation as well as Tyronne's details. So thanks once again, Tyronne, for helping us and presenting this afternoon. And thanks to everybody for listening.
Mary, I think just jumping in, I think there was one question that came up a couple of times. You may have just not seen it. Tyronne, there were three comments around. Can you just run us through the staff loan principle again briefly, please?
Perfect. So effectively what happens is if you give somebody a loan, there's no pay-as-you-earn. So pay-as-you-earn is a deduction on the actual payroll. So, formally what you can do to your staff is just say to them, listen, we are uncertain times, we don't know how long this will last. As a result we've obviously suspended payments, but we'd like to help staff still. So it's always nice to have a little bit of paperwork in the background. And then effectively you just loan them the funds of what they, if you're able to, which is then be their net pay. And that just goes, like in terms of accounting, it'll just be a loan on your books. It'll be an asset in terms of the company. And it's just a loan. So now there's no actual pay as you earn on that amount. So the staff gets technically the same amount of cash in their bank. And then once, let's say it goes on for 2 months, hypothetical, 2 months, and then we'll have 8 months of the tax year left over. So that 2 months now, you just gross their salary up for the remainder of the tax year. So you take their 2 month salary, spread it over the 8 months of the tax year, and then they'll slightly pay a higher pay as you earn actually going forward. But effectively, the net effect is they're getting the same net pay. And then instead of you just absorbing the 35% that SARS is offering you to pay out over a few months, you'll then pay this over the 8 months, and then that's going to help your cash flow enormously. And especially in the short term, because what you want to do is, I don't know, maybe it's a psychological thing, but the more cash you have in your bank now while there's uncertainty, it's much better in terms of planning. Maybe when you come out, you need an extra round of funding to go do a marketing splurge or something. At least you'll have the cash in your bank. Once you pay the pay-as-you-earn over, obviously the 35% sort of portion that SARS said you can withhold and pay later might not be enough to do those type of things. So yeah, I don't know if that helps.
Got it. And then does that mean you then just write off the staff loans at the end?
Yeah, so what effectively happens is when you now run payroll after COVID, for the remaining 8 months of the year, what will happen is a portion of that gross income will be used to pay the loan down on the books of account, you know, and you need to just take it from there. Yeah.
Thank you, Tyronne.
If any of the PUPA participants would like to have a sort of clearer sort of breakdown around that, we can definitely have a chat with them offline. Show them a practical example of, you know, as such, if necessary.
Thank you, Tyronne. Sorry, Mary, that I interrupted, but I just saw the question come up. So back to you, Mary. Thank you so much, everyone. Have a very blessed day. We will be posting this online very shortly. So, so for those who want to pass it on to other businesses or friends that couldn't make the session, please do. It's absolutely invaluable information from Tyronne. Thank you so much, everyone.
Thanks a lot, guys.
Thanks, everyone. Thanks again, Tyronne.
Bye-bye.
Thanks very much. Thank you.
Bye.
Yeah.